taken on a massive amount of household debt in Canada since 1999, about $751 billion, which has led to some arguably unsustainably high GDP growth. It's an unsustainable situation. At some point, we're going to hit a ceiling of the amount of debt we can take on. And that which can't be sustained won't be. At some point, Canadians are going to have to start deleveraging. And when they start deleveraging, in other words, pay down their debts, that's going to lead to some economic slowdown, which will inevitably lead to some economic job losses, which are very painful. People should start paying down their debts now when it's relatively comfortable to do so. There are 5 things I want to talk about in terms of Canadian household debt today. The first of those is that it hasn't really dropped. I read some articles recently that suggested that debt servicing costs have dropped from 164.2 to 164. This is really nothing to really get excited about because the statistics in question aren't actually seasonally adjusted. We are as indebted as we were 6 months ago. Second point I want to make is that it's important to be careful when it comes to looking at percentage change numbers and drawing faulty conclusions from that. Recently I read that people were making a big deal about the fact that between 2002 and 2007, mortgage rates were growing at 10.4%, and between 2007 and 2012, the rate of growth had slowed to about 7.4% a year. If you can't infer from that that we are deleveraging or that we're paying our debts down or that we're ceasing to accumulate debt at a profligate rate. It's a fun fact with statistics that if you start with a smaller number, you can grow it at a faster percentage rate, but it's not going to have as big an impact if you start with a larger number and grow it at a slower rate. I can turn a canoe 25%, but I'm not going to displace a lot of water. Whereas if I turn an oil tanker 1%, I'm going to displace a lot of water. We should put this in some kind of context as well. Over the period 2002 to 2012, the Canadian economy didn't grow anywhere near 10.4% or 7.5% or anywhere close to that. Let's keep that in mind as well before we get too excited about drawing falsely optimistic conclusions from the data. Another problem I have with household debt in Canada is that it's outpacing the rate of growth of our assets. So at a time when we added $751 billion of debt between 1999 and 2012, that rate of growth in debt was about 6.5% a year. At the same time, our total assets were growing at about 5.8% a year, which means over time, debt is taking on a bigger and bigger percentage share of our total assets. We have little room to grow the economy as we have the last 10 years by fueling it with debt. That will inevitably lead to some kind of deleveraging, and when that deleveraging happens, the economy has to sort of contract a little bit, which is going to make asset prices generally fall, which is going to, in a sense, exacerbate the debt problem. The fact that debt represents a bigger and bigger percentage of our overall asset base is a little scary. My fourth problem with debt, and I don't think I've heard anyone else talk about this one, is the nature of the composition of debt. I'm looking specifically at the percentage of productive debt, or so-called productive debt. In 1980, 39% of all debt that was taken on by Canadians was taken on for business purposes, either to start a business or to buy a piece of capital equipment that would lead to future economic growth and employment and so on. By 2012, that figure had dropped to 19%. So-called productive debt represents a much smaller percentage of a much larger number as people take on debt in order to speculate real estate and asset markets or just to fuel consumption. That which can't be sustained won't be sustained. The economic benefits we've received from people taking on debt has to sort of slow as people start to deleverage in Canada, and that's going to lead to some significant consequences and has some implications for employment and for asset prices in general. And the fifth and final problem I have with debt is a bit more subtle. Basically, when central bankers manipulate the price of money, when they manipulate the price of interest rates down to multi-generation lows, that distorts the price mechanism. It punishes savers and forces people to reach for yield in riskier, higher yielding assets. And whenever we've seen situations like that in the past, they've ended unpredictably and catastrophically and quite quickly. And so those people who are taking on debt in order to fuel this are going to be hurt. My advice to people again and again is to not be one of those people that takes on debt in order to fuel this asset binge. Stay on the sidelines, at least for the moment. Thank you very much. That about does it. Wraps are all up. Next time I'm going to be talking a little bit about the surprising habits of wealthy people. I hope you tune in for that.